Welcome to Speidel's California Minute. I'm your host, Catherine Zidane. This week, we're discussing how California treats accrued market discount income. Speidel's federal and California tax update is the best 8-hour update to prepare for tax season. Learn about election year tax bills and proposals, using AI in your tax practice, California legislation passed in 2024, conformity issues, and more. Get registered for a live seminar or webinar session at caltax.com. A frequent question we receive from practitioners is whether accrued market discount income on U.S. Treasury bonds is taxable for California purposes. The answer is yes. A bond has market discount if its stated redemption price at maturity exceeds its basis immediately after it's acquired. In general, market discount bonds do not include bonds acquired through an original issue. When the holder of a market discount bond disposes of the bond, the amount of accrued market discount is treated as ordinary income and not capital gain. At the bondholder's election, accrued market discount can be computed by either using a ratable accrual method or under the constant interest rate method, for example, the amount that would have been included under the original issue discount rules. According to the FTB, quote, California generally conforms to Internal Revenue Code sections 1276 and 1278, which treat gain on the disposition of a bond that represents accrued market discount as ordinary income that is recognized and treated as interest except in certain specified circumstances. Because U.S. Treasury bonds are not one of the enumerated exceptions, the accrued market discount portion of the gain is ordinary income that must be reported as taxable interest income. This is true even if the underlying bond is a U.S. Treasury bond. The accrued market discount portion of the gain does not represent tax-exempt interest earned on a federal obligation, end quote. As an example, assume that Emily purchases a U.S. Treasury bond with a face value of $10,000 for $9,500 in the secondary market. The $500 difference between the face value and the purchase price represents the market discount. When Emily later sells or redeems the bond, the gain attributable to the accrued market discount is treated as ordinary interest income, not as capital gain. Holders of market discount bonds are required to treat gain realized on the disposition of the bonds as ordinary interest income to the extent of the accrued market discount. Alternatively, investors can elect to include the market discount in income annually as it's accrued rather than waiting until disposition of the bond. This election would change the timing of when the income is recognized, but not its character as interest income. The election applies to the taxable year in which it is made and to all subsequent tax years unless the taxpayer obtains the consent of the IRS to revoke the election. The basis of the bond is increased by the amount included in gross income. California allows taxpayers to make a separate election. Speidel's California Tax Letter is a monthly newsletter that will ensure both you and your clients are up to date with California tax law changes. You can get subscription details and download a sample issue at caltax.com under Publications. That's all for this week. Join us next time for another episode of Speidel's California Minute.